Right. They don't have that extra money to pay that up front. Also, if you refinance or sell, you could lose what you've paid in that PMI. So if you pay the PMI off early, you just lose that if you sell or refinance.
Oh, wow.
You gotta sacrifice. You wanna move like bosses move.
YMA, Young Millionaires Association.
All right, guys. Welcome to the YMA Nation podcast, Real Estate Wednesday.
Yes. Hey, everyone.
Look, she excited when it's her show. Hey, everyone.
Hey, everyone.
I'm Joe Wallace, and this is
Rebecca Wallace.
And we have an exciting show for you guys today. If you're on right now, make sure you like, comment, and
subscribe.
Click that subscribe button. The numbers just going up.
Yeah.
Just going up.
Doing great.
2,500 subscribers now.
And counting. And
counting. I think when we get up, somehow we just go do something like huge. Like
sounds like a plan.
Like a $500 drawing or something. We're going to do something big, though. Guys, again, thank you for being on. Down in the comment section, make sure you hashtag YMA Nation so you can go into our monthly cash drawing.
Do it.
We just had a bunch of people win last Friday, right?
They sure did.
Make sure you hashtag YMA Nation down in the comment section. Also, if you're on Facebook, go on YMA Nation on Facebook and share the video, like the video, and down in the comment, YMA Nation, hashtag YMA Nation. On Facebook, you can go into the drawing 3 times. All you have to do is share the video, like the video, and hashtag YMA Nation. And your name goes so you can win multiple times. Free cash. This episode is brought to you by Masters Credit Consultants, the experts in credit repair, credit restoration, and credit building. You can contact them at 864-249-9466. Website is www.masterscredit.com. The experts in credit building, credit restoration, and credit repair. 864-249-9466. www.masterscredit.com. We're talking about real estate today.
We are. So this is for our homeowners.
All of you homeowners.
Is for our homeowners.
Current. They mean they own a home right now.
Or it could be for buyers.
If you're trying to buy a home.
Yeah, it could. It could. So ways of getting a lower mortgage.
Ways of getting a lower mortgage. This is going to be a good episode.
It is. Yes. So I'm going to tell you guys some things that you could do that could help you if you want to bring down your monthly mortgage payment.
Right.
A lot of people are like, well, I don't want to go over X amount of dollars a month when they're buying a house, right?
Right.
Or maybe you had to purchase quickly and you weren't able to take advantage of some of these things. And so we're going to talk about how you now can get a lower mortgage.
Let's
do
it.
Okay, so if you are buying, one thing that you can do is you can put down a larger down payment. So we talk about how important having money saved up when you're going into buying a house is, especially in this market. We've talked about it often, the importance of just having funds for down payment and closing costs. But the more that you have saved and the more that you can put down, that could help bring down what you're having to finance, bring down your amount that you're having to finance, and that is going to help you bring down your monthly mortgage payment.
I think that's important too, because like there's a lot of programs out there for like zero down payment.
Right.
So you don't put that down, but if the house is $120,000, then that loan is going to be $120,000.
Right.
But if you put $5,000 down, now you got $115,000 mortgage, which ultimately helps lower down how much you're paying per month.
Right. And what goes into this as well is if you put 20% down, you can avoid PMI, which we're going to talk about PMI.
That is
which
big.
Is your private mortgage insurance. Now,
that
your private mortgage insurance is not your homeowner's insurance. Your homeowner's insurance covers the property and the contents of the property.
Mm-hmm.
Your private mortgage insurance is protecting that lender that holds the mortgage lien. So that is a separate insurance altogether, right? So the way that you can avoid paying that private mortgage insurance is if you bring 20% down.
I started off checking it every other week, just like most people do. Then it got out of control. I couldn't help myself. I started checking it day after day after day. I didn't realize that I was becoming addicted until my wife said something.
What did she say?
She said, "It's just a credit score, relax."
Are you checking your credit score?
Huh? Hold on.
So on
Right.
a $200,000 house, 20%, that's 40 grand.
Yeah. But I mean, then you're only financing
160,000,
160,000,
which will have a
And-
significant impact on how much you're paying per month.
and you won't have that
Plus,
private
you won't have
mortgage
PMI
insurance on certain loan types.
on certain loan types. Had to be specific on that.
Got to be specific. So we'll jump into PMI, and then we're going to come back up to some things that homeowners can do.
Okay.
So there's options of PMI. You can pay your PMI up front. This is one way to lower your monthly mortgage payment. So PMI is typically done by the lender. They're going to add it on to your monthly mortgage payment. So when you look at your settlement, your disclosures that a lender provides to you, and you'll see the breakdown of your payment. So you'll see like your homeowner's insurance, your private mortgage insurance, and then you're going to see your taxes if your lender takes your taxes out. Every lender is different, so you have to ask lenders questions like, what is going to be going into escrow? What are these numbers? Make sure you're asking your questions, okay?
Yes, it'll be included in that 60-page document that you're going to get.
Right. And if you don't understand it when you go to closing, an attorney can explain it to you as well.
Ask questions.
Ask your questions to your lender, to those specific people. Your agent may not be able to break down that information like your lender can, and they may say, hey, that's the lender's area of expertise. You go talk to them.
Right.
Okay. So you can do it as a part of your closing cost, which again goes back to you needing to bring more money to closing, because this is in addition to your down payment and your closing costs that you already have. So you can pay all of your PMI up front in your closing cost. But there are some cons to doing that. Okay. One is the extra money that you're going to need, because a lot of people, if, they're getting some seller pay closings, but they're going FHA and they're still having to bring money down, and they have to get things for the property. They have to get things for the house.
Right.
They don't have that extra money to pay that up front. Also, if you refinance or sell, you could lose what you've paid in that PMI. So if you pay the PMI off early, you just lose that if you sell or refinance.
Oh, wow. Is it possible to sell over your PMI to the new buyer? I know that's a random question.
No, because it doesn't go to, it goes to a new lender. So it goes to a new
You
mortgage
just
lien
lose
holder.
it.
And you can miss out on potential tax benefits. So I think like they talk about like different tax write-offs and and things of that nature that you get annually. You could talk to your tax preparer about that before you decide to pay your PMI up front. Right. But if you wanted to and you do all your research and your homework and you think that that's the right move for you, you want the lower mortgage payment and you plan on being in that home long term or using it for a portfolio property, a rental property, or something of that sort, then it may be beneficial to you to do that. So you could, if you own a property already, and let's say that you got in at when the market when the interest rates were higher than they are right now, or your credit wasn't the best when you bought the property, so you didn't get the best interest rate and you didn't have enough to really buy down the interest rate to what you wanted it to, and you've worked on your credit and improved it since that point in time, and interest rates are still pretty decent right now.
Because you got with Master's Credit and they help you improve your credit.
Right. So now you're in a position to where you could refinance your home. You could do just a straight refinance. You don't have to take any equity out or anything. You could just refinance your home. And typically it's a simple process. Doing a streamlined refinance, basically they're just lowering the interest rate. That's what they're doing. They're getting you a better rate based on where you are. And streamline refinancing that loan. This will help you get a lower mortgage payment, right?
I think everybody should focus on that. Like, you should always look into, can I get a better rate?
Right. And also when you refinance, let's say that you have an FHA loan right now and you refinance into a conventional loan and you have that 20% of equity in your house, then you could avoid the PMI. So now you don't have to that PMI attached. So you're saving money on both ends.
That's right.
The PMI goes away and you get a better interest rate.
Hold on. That's a jewel right there. That's a gem.
Yeah.
That's a gem.
Yeah. Also, you could get extended terms. So let's say that at the time that you purchased your home, some people are like, well, I don't want to be paying on this for 30 years. I want to do a 15-year, right?
Right.
But life happens. And you say, I wanted to do a 15-year, but, I need to stretch my budget a little bit further. And maybe you refinance into a 20 or 30-year. You can extend your terms.
Which means the payment will come down.
Well, which means the payment will come down. Because you got to think, if you take 30 and make it 15, you're going to have that double the payment, right?
Right.
So you're cutting the time in half, you're going to double your payment. So extend the time out, and you're able to lower your payment.
Yeah, because life happens. Like, no one seen the COVID happen. Look how many people lost their jobs and possibly was on like a 15-year mortgage.
And then could refinance again, get a lower rate, and possibly get a lower rate, and also extend that term to make their mortgage payment more affordable for them.
Absolutely.
Last but not least, which isn't the most, I guess, popular, but works for people who maybe have like a detached garage and they have like an apartment or something over it, you could rent out a part of your house. So if you have a building or something like that you could use for apartment space or, a basement, Airbnb became really popular. And so you have people like using parts of their house for Airbnbs, basements or garages, extra building, extra space. And the money that you make off of that, you could put towards your mortgage, and now you are saving that money. So you're using your land and your property to pay for itself, and it's not coming out of your pocket.
Our basement have everything down there. Refrigerator, you got everything that you need to live. Maybe we need to rent out our basement. If you're interested in staying in a very nice,
Oh my gosh.
Thank you. That was really good information.
Yes. So save money, people. Find ways to save money. It's going to help you budget. It's going to help you budget month over month. And at the end of the day, it's all about financing and learning how to manage your finances in a way that's going to benefit you the most.
And make sure you have good credit, because the higher your credit score, then you get a better interest rate. And a better interest rate means the less you'll be throwing away money, because when you're paying interest, you're throwing away money, guys.
Exactly.
All right, guys, so thank you. Yeah, but you're going to have to pay interest when you're buying a house. Yeah, it's almost like taxes, almost unavoidable. Almost, right?
Right.
So, guys, thank you so much for joining us for the YMA Nation podcast, Real Estate Wednesday. Make sure you like, comment,
And subscribe.
if you are not subscribed to the channel, subscribe to the channel.
You can do it. Do it right now.
Do it right now. Make sure you hashtag YMA Nation down in the comment section too, and we will see you guys on Friday for Sports Talk Friday.
Boss's view. You gotta sacrifice. You wanna move like bosses move.
YMA, Young Millionaires Association. Yeah, see, that's the association.